Hi there, welcome to kneppyinvests. So time for part 2 to 8 ASX stocks I'll be following closely in April 2021. Now the main theme of the companies I'll be focusing on today is a turnaround story. So in all the cases, all the companies I'll be looking at, the share price has been beaten down in recent times, and I'm looking for some sort of catalyst to turn the story around. A couple of companies, if the share price falls even further, I'll become even more interested. One of the companies, the share price looks like it could be turning around, and that is also true for the other two companies. So what are the 4 companies I'll be looking at today? A wide variety of companies I'll be looking at today, both in scope of what they do and market size. So Zoono, Aurizon, Kathmandu, and St. Barbara. I have actually never owned any of these companies before, and so there is potential. Maybe I'll buy into one of these companies in April, particularly if there is some sort of catalyst to re-rate the share price or turn the share price into an uptrend. So the first company I want to touch upon is Zoono, and I started following Zoono in October 2019. So with this daily chart, I just want to look back through a period pre-COVID, so looking at from September 2019 to February 2020, because this was when the share price of Zoono was starting to be re-rated by the market. And this was pre-COVID. So the re-rating of Zoono at this point in time was all pre-COVID related. And by end of this period, you can see the share price got up to $1.50. And that's all pre-COVID. So the whole point of me showing this chart in the next chart is to show you the market sometimes can overreact on the upside and then also on the downside. So why did I start following Zoono? Well, they released a quarterly cash flow report on the 14th of October 2019, and this is what got me interested in this company. Cash receipts for the quarter were 1.2 million New Zealand dollars, so they do report in New Zealand dollars because they are a New Zealand company, and they were operating cash flow positive, and that was the catalyst. That was sort of the turning point in the company. The market got interested, and you can see that interest in the large volume of the release of this announcement. Share price went from 8 cents to above 10 cents and has stayed above 10 cents ever since. So for me, the next point thing was the next quarterly cash flow report that would have been or was released in January. And it was released on the 16th of January. Now, cash receipts for that month went down from 1.2 million to just below 600,000. And the main things they mentioned in this quarterly cash flow report were all about the African swine flu, nothing about COVID-19. So at this point in time, the share price appreciation was all based off nothing to do with COVID-19. Even a few weeks after this, the share price started to increase. So there could have been some sort of market expectations that Zoono was going to be beneficial for the COVID-19 spreading throughout China, because at this point, there was no thought that the COVID-19 would become worldwide pandemic. So now let's go to the present, and this is the data chart from July 2020 to current prices. And this is an ugly looking graph for those who are a Zoono shareholder. So if you are a Zoono shareholder, maybe you should shut your eyes right now and maybe go away from the computer and look at something else. So this is a share price action going from the top left to the bottom right. It's complete opposite to what you want to see. Share price has gone from above $3 in July 2020 to 62 cents currently. Now, just like the previous chart, which I showed you the quarterly cash flow receipts from each quarter, I'll do the same in this chart, and you can see what's happening with the trend in cash receipts. So the first quarter in this chart was released on the 16th of July 2020. Receipts for customers in that quarter, $19.8 million, which is significantly higher than the January 2020 receipts, which was 600,000. So you can see Zoono was a major beneficiary of COVID-19, a massive demand for their products, particularly in the first half of that year. So what happened with the cash receipts? Well, the market was expecting those cash receipts would die off as the demand for Zoono products will become less and less as people, stocked up on their sanitizing products and whatnot. So the next quarter, released in October, 20th of October, cash receipts was 15 million, still significantly higher than what we saw pre-COVID, but coming down. And the market just saw that, the receipts are coming down, and really didn't like that because they thought the expectations were the receipts would fall even further, and we did see that when they released the next quarterly in January of 2021. Receipts were down to $5.5 million. The market absolutely punished Zoono on the release of this report. Share price went down to $1, and it's been falling ever since then. Right now, last time I looked, it was around 61 cents or so. And that 61 cents is the exact same price it was pre-COVID in January of 2020. So when they released that quarterly cash flow report, the share price was around 60 cents. So right now, the market is pricing Zoono as it was before COVID-19, even though they've experienced cash flow coming into the company, and they have experienced some sort of, I won't define it as annual recurring revenue, but they are going to have recurring revenue over the next 5 or so years based off their products. So I think, in my opinion, there is potential that the market is overreacting to what they see as Zoono, their products, or the demand for their products is becoming less and less. And I just think, just like I think a year ago, the market was maybe overreacting to the Zoono story. Right now, it's overreacting to the downside, and I think the share price is becoming more interesting the further it falls, because the market cap right now is at $100 million, but they are operational cash flow positive, and I think there is a possibility they'll remain operational cash flow positive in the future. There was a very interesting interview with Paul Hyslop, the CEO of Zoono, with Alan Kohler from the Eureka report. This was released on the 4th of March 2021. I'll try to leave a link in the description of this video if I remember. My memory is quite bad, so even though I'm saying it now, I might forget. So all you have to do is go to Eureka report if I don't leave the link there, and you'll find this interview. You don't have to pay for it. There's a few interesting things in this. During the interview, he mentioned they are selling around 350,000 to 500,000 litres a month right now, with an average price of about $11 a litre. So the demand for their products is still there. It hasn't really dried up, and the feeling around this interview was Paul Hyslop was quite confused around the market really driving share price of Zoono down, because the demand for their products is still there, and there are expectations that those cash receipts will start climbing again. Maybe not expectation, there's, I'd say, a realization that the most previous quarter released in January, that is the low point, and we'll see that rising. He did mention the difference between cash receipts and revenue, and I think he said in the interview they had $7 million of revenue in December, and all that is going to go into the cash receipts for the current quarter. So if he's right, and he may not necessarily be right because he's trying to sell the company, but if he's right, I think the January receipts we saw where the market really panicked Zoono could be the low point, and maybe we'll start to see an upwards trend again. And he also mentioned the net profit will be a lot higher in the second half of the year. So there is potential that this is the low point, or we're heading towards a low point in the Zoono share price. If it does fall much further, this company definitely becomes more and more interesting. Personally, I'll wait for a little bit of a shift in the sentiment, because the sentiment around Zoono still is quite negative. So I just want to wait for that shift in the sentiment, because you never know how long the negative sentiment will run the share price down. It could go to 40 cents, 30 cents, you just don't know. And it's still a falling knife situation. You never want to catch a falling knife. The second company I'll be looking at today is Aurizon. They are a transport company, and I think the main thing they do transport is coal. I could be completely mistaken in saying that, but I'm just wondering in saying that whether their share price is highly correlated to the coal price, particularly if they do a lot of coal transporting. But the main thing, the main reason I'm interested in Aurizon is the share price, and the share price is almost at 8-year lows. So I've drawn in a support line at $3.60, because that is the low over the past 8 years, and every single time it hits around $3.60, it's bounced off it really healthily. So the first time was in 2016. In fact, the share price went as low as $3.40, and as soon as it went to $3.40, it bounced really well off that. And then it went from about $3.60 all the way up to $5.20 in a few months or so. And the share price just going sideways, a little bit of uptrend there. And then we did see the share price get as high as $6 in around 2019 or 2020. And then we saw the share price come down. During the COVID-19 financial panic, the share price again went down as low as $3.40 and bounced really healthily off that low. In fact, the share price went from $3.40 to $4.40 in 1 week. Now, a few weeks ago, it reached that low again, $3.60, and has bounced off it. But if you do look at this chart over the past year or so, even pre-COVID-19, there is a well-defined downtrend. So even though it's got to $3.60, has bounced off it, that downtrend has yet to be broken. In the next chart for Aurizon, I'm just going to zoom into the last 6 months, looking at the daily chart, and a very well-defined downtrend. So I've left the moving averages here, and the share price is tending to stay below the 100-day moving average. So the well-defined downtrend is still in existence with Aurizon. So the main reason I'm following this company is it did reach a low a few weeks ago, and I want to see what happens with the share price in response to reaching that low. I want to see if this lower low, lower high setup changes and we start to see the opposite, higher low, higher high. And if we do start to see that, there is a potential shift in the trend. So the main reason I'm following Aurizon for April is to see if the shift in sentiment and the shift in momentum in the share price does happen. There is a couple of signs it might be happening, but I want confirmation. The third company I want to talk about is Kathmandu, and my main thinking with this company is if it is now one of the best recovery trade possibilities, because we've seen a lot of other retail companies, in fact, their share price is now above the levels we did see during or pre-COVID-19. But Kathmandu has really struggled to get back to those highs. So pre-COVID-19 share price was around about $2 to $2.50, and it went the share price went all the way down to 50 cents. It did start to recover during April into June, but then we've just seen the share price consolidate for a 9-month period. So that's just going sideways, consolidating, and at the same time we've seen volume decreasing. So the market's becoming less and less interested in this company. But when I see the decreasing volume on consolidation, I do become more and more interested in a company, because there is potential, particularly if we see increasing volume, we might see a potential breakout. Now, the reason I'm interested in this as a recovery trade is Kathmandu do provide clothing for outdoor activities, camping, that sort of thing. And the only time I've been to a Kathmandu store is when I went overseas during winter and I needed some warm, well, cold weather clothing. And that's the only time I bought some clothes from Kathmandu. So I think once we see travel returning, people going outdoors, I think more people will visit Kathmandu. They've also bought Rip Curl, and Rip Curl is actually doing quite well as well. So that's the main reason I'm interested in this company. And the other thing is, over the past few weeks, we've seen an increase in volume. So that is showing there is potential that there are some fund managers becoming more interested in this company. And that's exactly what I want to see. I want to see fund managers start buying, and when you see quite a few fund managers buy into Kathmandu, they will start to force up the share price, and that's when you get on board. Now on to the daily chart for the last 6 months with Kathmandu, and this is not really a company you ought to have been holding during this period because the share price has been going sideways and has been consolidating. You can also see the decreasing volume, particularly from December through to February. And I've also included the on-balance volume, and I'll get into why I've included that in the next second. Now, over the past few weeks, we've seen some interesting things happen with Kathmandu. We've seen the share price increase, the volume increase, and the on-balance volume increase, which is suggesting all of these that there is potential. Some fund managers are becoming interested in this company, Kathmandu. Now, they did release their half yearly on the 23rd of March, and the market did like it. We did see the share price increase. I would have probably preferred to see a higher volume on that day, but in subsequent days, the share price has started to go up. I wouldn't say this is a breakout in the share price because you're going to have to go back like a month or so for the most previous time the share price was this high. So it's just been maintaining in this consolidation period. But the fact that the volume has increased does give me some hope that there is a potential breakout trade here. Now, when you look at the financial numbers released in the half-year report, doesn't suggest to me there is real good value here. Market cap, almost $900 million. They do have still a fair bit of debt, which means the enterprise value is about $1.2 million or so. Revenue of $785 million, operational cash flow for the trailing 12 months is at $157 million. So the enterprise value to operational cash flow is around 7 to 8. And typically what I look for there is numbers less than 6 for real good value plays. Now, I do think if they do get recovery, people coming to their stores more, buying more outdoor equipment, particularly if overseas travel becomes allowed, I do think those numbers will actually improve. We'll see operating cash flow getting higher, and that EV to operating cash flow might become lower. So that could be the trade here if you're just looking at financials. And the last company I'm looking at today is St. Barbara. This is a gold mining company. I think the share price got as low as something like 10 cents in 2012 or 13. And there was a possibility that St. Barbara could have gone out of business at that point. So that would have been a high risk, high reward sort of trade. They didn't go into bankruptcy, and the high risk did eventuate into a high reward because the share price went as high as $5.20. So that's a massive return if you took that risk back then. Now, this is the weekly chart over the past 6 years. You can see from the start of this period to about 2018, the share price did go through a low, really good uptrend, but we've seen the share price now enter into more of a downtrend. Now, just like Aurizon, we have seen the share price get to very interesting levels. So again, I've put in a support line because the share price has reached this level a couple of times in the past. So back in late 2016, the share price reached about $1.80, and then we did see the share price bounce off it and went from $1.80 all the way up to $5.20. So that's really a 3 times return in that time period. And then it reached $1.80 again not that long ago. So I think that would have been during the COVID-19 financial panic. Unfortunately, I can't see the time period there, but I think that would have definitely been during the COVID-19 financial panic. And then share price went up, got to $3.80, and we've seen a bit of weakness in gold prices recently, and the share price in St. Barbara has gone from $3.80 all the way to below $2, so almost halved in price, got nearly to $1.80, and not quite, but almost at that low. And that's the reason I've become interested in St. Barbara, simply because the share price is almost at, was it 5-year low. Now, if you go back to 2018 and then early 2019, we did see the share price reach $5.20 twice and get no higher. And when you see that sort of pattern, that is a double top, and that is a selling sort of a topping pattern. That's when you sell, when you see that sort of pattern in the share price. And finally, I'll just show you the daily chart going or looking back at the last 10 months or so with St. Barbara. So they did reach that peak in the share price just below $4 back in late July. And ever since then, the share price has been dropping. A well-defined downtrend here. So it's been I've got an 8-month downtrend. And looks like there is potential that downtrend could have been broken in the last few trading days, the last 5 days or so, because the share price has gone sideways and a little bit up, and it's broken through that downtrend. So all eyes are on St. Barbara to see what happens with the share price over the next few weeks, to see if this break in the downtrend is confirmed. And that's another reason why I'm following this company quite closely, because this could be a good gold play for the next few years, particularly if you're fairly bullish on gold prices. So that ends these two videos on 8 ASX stocks that I am following in April 2021. Just because I'm following doesn't mean I'm recommending them as a buy, hold, or sell. I'll leave that up to you to decide. And if you like any of these companies, make sure you do your own research and come to your own conclusions. My main goal into doing these videos is to empower someone, empower you to make your own decisions, try to encourage you to do your own research, come up with your own decisions, because I think right now too many investors are relying on other people to make their decisions for them. So that's all I will have to say on that. I'm not a financial advisor, so if you do need financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.